There's an age-old trading problem that you must fix to become a consistently profitable trader. It's so frustrating to so many traders. We help you fix it in this video with a 5-step solution. I'm Mike Bellafiore, and we're one of the top proprietary trading firms in the world with numerous 7 and even 8-figure per year traders. We hope you agree you've found the right place to learn. There's a trading problem traders sought to solve when I first started trading. And we don't have to mention when that was if that's okay with you. And there's a trading problem new traders needed to solve when we first started our firm in 2005. And there's a trading problem some new traders on our desk need to solve today. In fact, I just got an email from a very promising trader where this was the very issue. It's an age-old trading problem to solve for new traders. It's an age-old trading problem you must solve to become a consistently profitable trader. Let's dive in. Okay, the age-old trading problem. In a daily report card, DRC, one of the newer traders we really love, regretted that he cut a winning trade too early. He carved, "I covered way too early." Here are his exact words from his DRC for you. And he wrote, Beto was talking through this with Armand. BTC made a very fast move in the past couple of days, so looked for the OE short, waited for the breakout under VWAP and a pop to short, then hit 1,000 versus VWAP. Threw some bids, and then I covered way too early in this, but I was very uncomfortable in the trade as it was midday and BTC wasn't moving very quickly. No volume made. Idea worked, just needed to be more patient. Okay, those were his words. This is that age-old problem traders must solve. When do I exit my winning trades? The trading frustration mounts. It can be very frustrating for new traders to exit a winning position, but then watch it continue in the same direction. Traders lament how much money they left on the table. They say and think, I should have just held this. Or if I could just hold my winners longer, I would be a consistently profitable trader. And then also, why am I such a wuss and scared to hold longer? Or what the heck is wrong with me? There's nothing wrong with you. Well, there may not be anything wrong with you. I mean, we have never met. Maybe there is, but probably there isn't. And understanding there is probably nothing wrong with you is important to recognize so you can solve the real problem. There's always a tweet. When I decide to write about a particular trading topic, I ask the trading community in a tweet for their thoughts. Transparently, my hope is to get the trading community thinking about this issue, contributing to the discussion, and learning from others. I'm the son of a teacher, so maybe this is where I get this from. And I did so on this very trading issue. I tweeted, if you sell a stock and it trades higher, did you make a bad sale? There were many excellent responses from our trading community, which you can go ahead and see on my Twitter feed. And this was a particularly good response from No Sky. Develop clear trading rules to exit. From my seat, the issue is a lack of clear trading rules to exit your winning trades. The problem you must solve is how to exit your winning trades. And you must do this for every trade, for every type of trade. And each trade is different. Some trades are worth holding, and you should lament about exiting. Other trades, I would suggest, most trades for most traders are perfectly fine when you're exiting. And then what happens to the stock after that does not matter. And I know that's hard for new traders to wrap their heads around. You're thinking, but Bella, if I sell and the stock trades higher, then obviously I made a mistake. I should have held. No. Every trade has an exit that is right for that trade. And when that exit visits, then you exit. And what happens next has nothing to do with the execution of that prior trade. And after you exit, then you look for the next good trade that has its own clear exit rules. That's why someone wrote in a book, which, by the way, I hear is very good and is called a trading classic: one good trade, one good trade, one good trade. Okay, let's get back to that newer trader who unearthed this age-old trading problem. I challenged this trader with a response to his email with my own email. This is important to settle in your trading business. Did you cover too early for your trading system, or did the product just trade further after you exited? Was this an issue of this trader exiting too early or false regret? Did this trader have the necessary set of rules to exit this trade for which he was regretful? The new trader's response. The new trader responded to my challenge. He responded definitively. He did so after thought and collaboration from a more experienced trader at the firm. He responded, I full on covered too early. I was talking through this trade in GChat with Armand, and we were both looking at the gap fill and measured move and 2-day VWAP as the target, 1520, low 15 area as a target. I didn't stick to my plan, and I got scared out of it. After the close, I talked through it more with Armand. He told me that when there is a higher time frame setup aligning, we need to be more conscious of the entry and exit, and it might need some more wiggle room. If I'm making an intraday swing trade, I need to be prepared for the intraday swing trade, not the scalp. This is a good response from the rookie. He reviewed this issue diligently and smartly with guidance from a more experienced trader and put together a nice response. Dynamic risk management. Further, exiting or holding is not an all or nothing decision. The rules you develop to exit are not sufficient if you only decide to completely exit or hold. It's also essential to consider a trade decision that takes partial profits. We call this dynamic risk management. A senior SMB trader, better said, and frankly, a senior star SMB trader, copied on this DRC, offered invaluable insight to this newer trader on this very point. He mentored, I think your own write-up said more about the trade than you realize. When you quoted, I was very uncomfortable in the trade and it was midday and BTC wasn't moving very nicely, it seems like you had every reason to at least take a dynamic risk reduction, reducing risk because your idea is weaker than you initially perceived it to be, for instance, because you now have more newer information, and possibly to get out entirely. Oftentimes, intuition can be an important consideration, especially for experienced traders. I also agree with Bella's point. You have to be clear about what your idea is, what your target is, and then just execute your system. Once your system says to do something, you do it. And what happens afterwards, such as you could have made more by holding on, is irrelevant. Let's offer a 5-step solution to get better at this issue. 1, develop clear exit rules for your winning positions. 2, create clear exit rules for all of the different types of trades in your playbook. 3, consider rules utilizing dynamic risk management. 4, continually measure and study your exits and consider exit adjustments. And 5, adopt the mindset, one good trade, one good trade, one good trade. From all of us at SMB, train and trade well. Do you want to learn more actionable trading ideas that you can implement starting tomorrow from SMB? Then watch the video, 5 Keys to Make More Money in Your Profitable Trades, appearing on your screen right now.